Hundreds of delegates are gathering in Johannesburg for an indaba that seeks to create a lot more black industrialists in South Africa. Will the country, however, get it right this time? We'll be looking forward to getting some answers on that particular question, but that's not the only thing we have on the agenda for you tonight. Here's what else is on the pipeline for global business. Egypt records success in reducing black market forex trading. And cost-cutting pays off in a big way for the regional oil marketer, KenolKobil. Let's start in South Africa, where the president in that country, Jacob Zuma, has thrown his weight behind a policy framework that aims to address past race-based economic biases. Now, while addressing the first day of the Black Industrialist Indaba, President Zuma expressed his disappointment at how poorly black South Africans have embraced the policies aimed at reducing economic inequality in the country. Now, this meeting aims to foster dialogue between the public and the private sector actors in order to advance black industrialists, as KenolKobil now reports.
The country has been addressing black economic empowerment since apartheid ended in 1994, but past policies have been criticised for enriching a small proportion of the population. A little over 2 years ago, government started developing a black industrialists policy.
To me, it is a serious matter. It is a matter of liberation. It's not the matter of trying to help somebody have business or whatever. It's a matter of liberation. Political liberation without economic liberation is not a complete liberation. That's the reality. We have an opportunity to shape this country the way we want. This country, South Africa. Instruments are there. The Constitution, the laws, everything. It is a question of how we understand it and how we utilize the instruments in our hands.
700 delegates were in the room as the president shared his thoughts and called for tangible results.
It brings a good motivation to black industrialists, and from this I believe that a lot of black entrepreneurs will wake up.
I think there's a great initiative. For the first time, we've got confidence that black industrialists will happen. It's very, very, very promising.
The President has really provided inspiration to any aspiring black industrialist. And I honestly think that if we are not going to take advantage of this political will from the President, then the black industrialists will only have themselves to blame.
We cannot blame anybody except ourselves if with the next 3 years, as you say, we've created sustainable, I repeat, sustainable middle-sized SMEs.
On the supply side, delegates heard that government had convinced developmental finance institutions to stop behaving like banks. But on a practical level, it's about the demand side. Who's going to buy the goods and services?
So you need to cultivate, come up with incentives, where necessary, come up with strong measures to ensure that the value chain of, or the supply chain of large corporations includes supplies from small players as well as black industrialists.
The policy framework debate has started, and by the end of the week there should be a clearer understanding of what shape the final policy will take. The discussions will be heated, but it's expected that the framework will be set and it'll set the economic tone for the foreseeable future. For CCTV in Midrand, Johannesburg, I'm KenolKobil.
We're still in South Africa, but for entirely different reasons this time around. On the 26th of March, the South African Reserve Bank's Monetary Policy Committee will be having its next rate-setting meeting. Now, according to a poll by Reuters, not one single analyst is expecting a hike in interest rates at all. However, from a consumer's perspective, that doesn't mean that it should rule out a rate cut entirely.
Well, the governor has made promises that nothing is going to change. He said for the next 2 sessions or 2 meetings of the MPC, he doesn't think that he's going to increase the interest rates. So we are looking forward that everything remains the same.
Interest rate, it affects us negatively when the rand loses its value, because we find that when shopping overseas, we shop at a higher cost than we normally, so we always have to increase our pricing in order to accommodate the interest hike.
The last time the MPC met, there were no big issues around inflation, and I thought that was the right time to do a cut, and Then if they had made a mistake, then they would have corrected it now. But I think they should give us that 50 basis points cut, and they'll review, because they'll meet soon and they'll review.
Well, still on monetary policy, but this time in Egypt, the central bank over there kept the pound steady at 7.53 Egyptian pounds to the American dollar at its latest foreign exchange auction on Wednesday. The domestic currency, incidentally, was also fairly stable in the black market. We'll get round to that in just a moment, but let's look at the official numbers here. The central bank has kept the official rate steady for more than a month now after letting the pound weaken in an attempt to wipe out black market trading altogether. The bank offered $40 million in today's auction. It saw 38.7 million of that at a cut-off price of 7.5301 pounds to the dollar, unchanged essentially from the last auction on Sunday. Black market traders said volumes have fallen dramatically ever since the central bank's move against them, and it also did impose a cap in February on the amount of dollars that can be deposited in banks. Now let's get the details on what's going on up north with Yasser Hakim. He's live in the Egyptian capital of Cairo right now. Yasser, the central bank has, as we mentioned earlier, kept the pound steady against the dollar for more than a month now at 7.53. Are there market expectations, however, for more devaluation in a gradual sense later on in the year?
Well, what the central bank is saying that there will be no devaluation soon. And what it's trying to do is to control the black market, to control the devaluation, to keep it steady as it is for the past month. But the measures that were taken by the central bank has angered some businessmen, especially putting a cap on depositing dollars into the bank. This cap is like only $10,000 a day and a maximum $50,000 per month for companies. Big companies need more money to be deposited per month, more than 50,000, and they're saying they're not able to bring in goods or produce because they don't have this necessary means now or the funding. So will the CBE ease those measures in the future, and thus we will find again a devaluation of the currency, but at a slower rate, since the black market has now been effectively closed down for now. So it's keeping control, but maybe trying to gradually ease off these restrictions to ease also investments and foreign investments coming in by keeping the dollar into the market, helping investors to import by depositing more dollars into the banks. So this will show up in the next few months.
Let's look at the supply side as well. January's tourism numbers were relatively positive, especially compared to January 2014. Can that sector continue to offer increasing levels of support to the pound-dollar rate, despite the deflation that we're seeing in key European source markets?
It has always been the main source of hard currency for Egypt, and since 2011 it's dropped drastically and lagged behind as a source of income. But it's picking up. The government is hoping it will help. It's giving a lot of incentives for anyone who wants to invest in the tourism industry. For Arab countries in the economic conference have injected a lot of cash into this market. There is also a new markets being attacked, like the Chinese opening up with the Chinese market having direct lines, airlines to China, to 5 cities in China, direct to Cairo and Luxor and Aswan. So there are efforts to retain the tourism industry. It's one of the main sources, not just for income, but also for employment, the highest for employment in Egypt. So there are hopes that it can revive the tourism industry to help keep the dollar and pound stable in the next few months.
Indeed, we'll have to leave it there for the time being. That's Yasser Hakim live in Cairo. Let's take you to East Africa now. The Kenyan oil marketer KenolKobil said cost-cutting, a fairly aggressive round of cost-cutting, had helped to boost pre-tax profits by more than double in 2014. And it's forecasting stronger results this year by lowering financing costs and reducing its net borrowing levels. Now, the company operates in several countries in Eastern and Central Africa, including Ethiopia. It reported pre-tax profits of $16.5 million last year. That's just up from over $6 million rather in 2013. According to management, the low oil prices in the last quarter of 2014 also did contribute quite a bit to enabling it to achieve lower borrowing levels, and that in turn translated into far healthier margins. The firm added that it would continue to lower financing costs and reduce net borrowing as well. Operating costs in 2014 were down by about a quarter, and that continued a downward trend that has been in force all the way since 2012. Let's get some more details on these numbers. David Ohana is the CEO of KenolKobil, a field retailer, as you mentioned, with operations across several countries in Eastern and Southern Africa. He joins us now in studio. Mr. Ohana, the company, of course, did cut its overall debt load by 4 billion shillings in the last fiscal year. That's a fairly big number. How exactly did you achieve this, and will this trend continue in the 2015 fiscal year?
Good evening. Yes, it will continue. Our cash generated from the business grew by 300%, and it was mentioned in my commentary, to 5 billion. So all the cash we generated, we actually channeled it to pay debt, and it worked well. Definitely, we are going to continue. Actually, in the first quarter, we came by additional 2.4 billion on top of the 4 billion we mentioned at the end of 2014. So there is special focus on the debt ratio, and the emphasis is to get the gearing ratio. I think I'm on footage in this studio talking about taking it from last year below 50%, and I think we are there and we are quite happy.
Are you going to take it lower than 50%, or are you comfortable with the 50% gearing ratio?
We want to take it to the lowest level possible. We want to keep the margins and the profits we are making for ourselves, and let's share them with the banks.
Indeed. Let's talk about your foreign currency losses, however. Those are up by about 250% to $367 million. 367 million shillings. Cool. What happened there?
Yeah, look, we are exposed to the dollar. Remember, all our imports in the group are in hard currency. The difference from last year, this 360 you mentioned, half of it happened in Kenya, but half of it was generated from subsidiaries. Countries like Tanzania and Uganda, we were more vulnerable to the exchange losses. The local currencies there lost a lot, and it contributed substantially to that 360. We took many measures, mainly in Kenya and in those countries. Some of them was just to reduce dollar-denominated loans. And in other countries, we took some actions that when they will completely mature, will come and report, but we are dealing with the exposure to the currency. I can tell you in Kenya, for the last 2 months in 2015, January and February, we gained while the Kenya shilling was losing.
Indeed, but what's your currency hedge strategy moving forward? I know hedging tends to be a bit of a toxic word in some corporate circles, but given the amount of currency exposure you have, the dollar, the Kenya shilling, Uganda shilling, Tanzania, and so on and so forth, I mean, surely you must have an idea of what exactly you need to do to hedge against a stronger dollar and the fact that African currencies at the same time are also falling.
Yeah, even us, we had bad experience with hedging in 2012. Remember, we had a major loss, a lot related to hedge policy. What we are doing, we are buying dollars on the day, on the needs we have. We board direction and board guiding us to buy as and when we need. And generally, in any country we are operating, we are reducing exposure to dollar-denominated loans, and it worked well in Kenya. I can tell you, again, in January, the Kenya shilling lost to the dollar almost a full 1 Kenya shilling, and we gained. So we are also doing a natural hedge on the basket of sales. Aviation and export is in hard currency. We are collecting money in dollars. So we balance the basket in Kenya well, and we have less exposure. So it's internal balancing and avoiding exposure to dollars, or avoiding loans in dollars.
You also did make reference in the results commentary to new financial institutions and more competitive structured financing facilities. Could you elaborate on that?
Yeah, look, we shifted a lot on the dollar, mainly the product financing, to international banks. It was almost by half, more than by half. We got a very attractive rate. We are working now with 6 international banks outside Kenya. For the Kenya shillings, we changed a bit the basket. We moved to new banks recently, within 2014, and on much lower interest rates. All this resulted to a much lower financing cost, and we continue doing so. We are just now in negotiation with additional 2 banks, international banks, to get more facilities on reduced rate.
Indeed, we'll have to leave it there. Always a pleasure having you here. David Ohana, the CEO of KenolKobil, in our studios tonight. Let's make a quick run now through the markets and see exactly what's been going on with the equities. Just as a reference point, KenolKobil was up about 7% in trading today. Investors clearly pleased with the results and the numbers that they're seeing coming out of that company. Mixed bag across the board. The Egyptian market down by, well, almost 200 basis points. JSE in South Africa also down significantly. Of course, the MPC will give quite a bit of direction in their rate-setting meeting, which starts tomorrow, and that will have a trickle-down effect across the board. Currencies, bonds, fixed income rather, and of course, equities a little later down the line. Coming up next, Congo is getting public parks to offer not just recreation, but business opportunities for women. And what exactly is at stake when Nigerians head to the polls on Saturday? We'll be looking at that in detail shortly.
Sustainable development and a commitment to developing partnerships with Africa. Some of the key phrases already used at the Africa Global Business Forum here in Dubai.
There is a need for a predictable environment in which investors have to put their money.
Welcome back. Our journey continues across the African business landscape right here on Global Business Africa. Now, the creation of public parks in cities across Congo, Brazzaville has not only been welcomed by citizens starved of local recreational facilities, but it's also opened up economic opportunities for women. The country is home to the world's second largest rainforest. As Volder Kirelsa reports in What's Hot Tonight, as demand for parks grows, women are the ones who are planting and maintaining these spaces.
Until recently, these wide open spaces in the Congolese city of Pointe-Noire did not exist. But an initiative launched 2 years ago by President Denis Sassou Nguesso has seen green areas spring up in places where grass is a luxury, space is premium, and where the irrigation of plants and trees is hardly known.
We are quite happy. We had no way to entertain in the past, but since this green area has been set up, we come and sit down here. We have our beers, and when we are tired, everyone gets back home.
Congo-Brazzaville is home to a section of the Congo rainforest, the second largest rainforest in the world after the Amazon. Stretching from the Congo through 5 African countries, it accounts for 18% of the world's remaining rainforest. By recognizing the importance of their environment and how they can benefit from it, local residents now understand how important the forest is and the responsibility they have to preserve it. Women are playing an increasingly important role in running new residential areas and developing the green spaces.
Yesterday, women would not know themselves. You can say that there were shadows of men, but through the work process on the fields, they came to discover who they are. We benefited from government help. They give us funds and instructions mentioning all the dispositions to be enacted on the site. So for the green area, we did a good job, technically speaking. We have set up a real public garden in Hinda between 2 traffic lines, the railway and the tarmac road.
While illegal timber has been a big export over the last few decades, the government is concentrating on diversifying the economy. With a population of around 4.4 million people, the sub-Saharan country's main export is diamonds and oil. Volder Kirelsa, CCTV.
Nigerians are trooping to the polls this weekend in a crucial presidential election. Africa's largest economy has suffered a serious battering from a combination of falling global oil prices and a far weaker currency as well. All of that has combined to deal quite the blow to government revenue. Here's Deji Badmus now with a look at what the main candidates are putting forward as their solutions to getting Nigeria's economy running again.
For about 2 months now, the 2 main candidates in Nigeria's presidential election have crisscrossed the length and breadth of the country, making mouth-watering promises to voters. The election comes at a very bad time for Africa's largest economy. The nation's currency, the naira, has depreciated by over 20%, and the government has been compelled to carry out significant budget cuts. 2 economic issues have dominated political campaigns so far: unemployment and falling oil prices. But just what are the parties putting on the table to address the problems? Goodluck Jonathan and his ruling PDP are proposing to create 2 million jobs every year. He's already initiated a youth entrepreneurship program known as You Win and another one known as Graduate Internship Scheme to help young graduates secure jobs. Buhari's APC on its part says if voted into power, it would create 3 million direct and indirect jobs every year. It says it will provide soft loans for small and medium enterprises to boost job creation. But analysts say what the politicians are offering would not go far enough to deal with the unemployment situation in the country, which is at an all-time high.
Talking of youth unemployment that is in the neighborhood of 40 million or more of people that are unemployed. How many jobs can you win deliver? You'll be lucky if you have up to 5,000 jobs or 10,000 jobs. When you relate that to the challenge, the number of people that are unemployed, it's quite huge.
The best way to go about job creation is to create a favorable condition for jobs, not to start quoting figures for jobs, because you never know how many. Anybody can fabricate any figure.
On how they intend to deal with the issue of dwindling government revenue in the face of falling global oil prices, both parties have similar positions. They say while they can do little about the price of oil in the international oil market, they would ensure Nigeria does not feel the heat when prices fall, as they are doing right now. The PDP maintains the key to solving the problem is diversification of the economy, which it says it is already pursuing. The APC too believes diversification is the way to go. It says it will focus more attention in developing the country's industrial sector and get more competent hands to run the economy. Analysts say both parties are on point on this one, if only they could keep their campaign pledges.
Interestingly, today's economy, Nigeria is a net exporter of cement. The government is driving the same policy in sugar. The government is driving the same policy in rice production. And the government is enforcing an automobile policy that will make for at least the assembling of vehicles in the country. Whoever takes over should not jettison that diversification policy.
But he's quick to add that with government revenue seriously depleted, whoever wins the presidential election will have his job cut out.
Whoever takes over after May 29 will have to face the reality that the economy, the revenue of the government has shrunk, and that the government today is no longer in a position as government was 3 years ago to implement a lot of the social benefits that are being bandied around in campaign grounds. So reality will come home and they will adjust, and they have to find ways of making the citizens moderate their expectation of government.
Moderating expectations will sure be a very difficult task, but then the politicians know how to do it and would surely try. But whether Nigerians would take any excuses this time around is another question altogether. DJ Badmo, CCTV, Lagos, Nigeria.
Right, now as far as commodities are concerned, one of the main narratives that's emerged into the wider story around oil, of course, have been concerns around the availability of storage and whether or not that will be filled up, especially at Cushing, Oklahoma in the United States. But we're not going to focus on that for the time being. As far as Nigeria's resident IMF representative is concerned, the country is weathering the storm of all these lower commodity prices, especially oil, fairly well. There were concerns, however, about the effect that security spending is having on budgetary balance. Now we're going back to North Africa. Tonight's edition of Grassroots will be taking you to the 48th annual Cairo Trade Fair in Egypt. Yasser Kim reports that over 700 companies are taking part, and they're from all sorts of countries: UAE, Kuwait, Bangladesh, Sudan, and even Kenya.
The International Cairo Trade Fair was inaugurated by the Prime Minister and the Cabinet with the participation of 700 companies from 11 countries. The fair is an opportunity for businesses to sign export and import deals. For Egypt, it aims at promoting trade relations as it tries to overcome 4 years of economic recession.
Deals are being signed in various sectors, from industrial and petroleum products to real estate, electronic and agricultural goods.
The United Arab Emirates is this year's guest of honor.
Our participation comes amid the Emirates' support to the Egyptian economy. There are companies here in the real estate, petroleum, shopping malls and SMEs. We are building on the success of the economic conference in Sharm el-Sheikh and executing the agreements signed there.
Other African countries are also seeking a piece of the Egyptian trade pie. Kenyan trade with Egypt stands at only $700 million, and this event could further open up the Egyptian market to Kenyan products.
We represent the tea exporting and packaging industry, and we introduced the famous Kenya tea packers 4 years ago, and it was very successful here. There is Kenyan coffee too. We are trying to create awareness for other Kenyan products. Not many people in Egypt know that Kenya is a major producer and exporter of flowers and fruits. This is an opportunity to show it.
The Sudanese section also attracted a lot of attention from Egyptians.
There's a high demand on the henna produced in our northern state and the fragrance oil. It's very much in demand in Egypt.
The fair is not only related to trade deals between companies, it was also open for the public to purchase products from the exhibitors.
I come here every year. I like Kenyan safari tea. I bought some. But what's good about the fair is that you find everything in one place and you buy what you want at lower prices than the market.
11 countries have participated in this year's trade fair, and with the return of the economic and political stability in the country, organizers here hope that next year it will be double this number. Yasser Hakim for CCTV, Cairo.
Right, here's a question we've probably asked subconsciously or vocally at some point in time. How exactly does smartphone use change your brain? Well, European researchers are looking into that particular problem. Dr. Akogosh's team, for example, has discovered that the brains and the thumbs of smartphone users interact quite differently from those who use old-fashioned handsets. Electrical activity in the brains of smartphone users were shown to be enhanced when all 3 fingertips, apparently, were touched. According to the research student working on that, Magali Curtis, activity in the cortex of the brain associated with the thumb and the index fingertips was directly proportional to the intensity of phone use. Now, Dr. Gosh says the results suggest that repetitive movements over the touchscreen surface tends to reshape the sensory processing from the hand, with daily updates in the brain's representations of where your fingertips are. Well then, a quick run through currencies here for you before we wrap up. Not much going on with regard to the Naira, for example, still around 199 to the dollar. The Central Bank of Nigeria, however, very empathetic that dollar use for day-to-day transactions in Nigeria is quite illegal. The last time we had language like that, it was in Kenya, way back in 2011. Here's what we're working on for tomorrow's program. We'll still be keeping a very close eye on Nigeria, looking at the economic issues that might dictate the outcome of the elections on Saturday. We'll also be looking at the leadership crisis that is still going on at South Africa's main power utility, Eskom. But that's it for this edition of the program tonight. Thank you so much for watching. I like hearing what you think about what we do around here. Global Business Africa at cctv.com is the email to use. And of course, you can also find us on Facebook and Twitter. See you in the next 23 hours. I'm Ramanyan.